DK Joshi, your sense, sir? Do you believe that what we are seeing is potentially persistent inflation and that could become a major challenge? It's not enough to say it's global. Yes, it's global, but we're going to have to deal with it at home as well.
That's right. I think it's a global problem. The reasons do vary across countries. I mean, for instance, just to give you one advanced country example, in US it is largely because the demand is very strong. I mean, the consumption demand, the labor market. In Europe it is largely because of energy. So I think the situation varies from country to country. In India, I think it is largely still a supply-driven phenomena because the overall consumption demand is not that strong. I mean, it is picking up, but it's not that strong. The interesting part is that inflation is not only rising, it is also becoming broad-based. And whether you look at food, you look at fuel, or you look at core inflation, which excludes food and fuel, it's across the board. And I think the pressure is going to stay for some time at least. I think now the one situation that can bring some relief is if the war ends, but who knows when the war is going to end? I mean, then I think you could see relief on commodity and
so you're saying are you saying that as long as the war in Ukraine persists, you don't see inflation tapering off? Am I correct?
No, inflation might taper off at some point, but it's going to remain above the comfort band. I think that's the point. I mean, as long as if you look at crude or commodities, I think by next year, they will fall from these levels. I mean, even if I think there's war or no war. But the point, so inflation will look negative for many of these items. I mean, but the point is overall inflation will still remain uncomfortable till we have a significant reduction in crude commodity prices.
Anirban Pan, are we seeing a possibility of a prolonged period of inflation which should be of great concern at the moment?
Definitely inflation is of concern. Having said that, I think let's look at it in a slightly different way, in the sense that the supply constraints have not evolved overnight. The supply constraints are definitely not with respect to just the war. It is also with respect to how China sort of was moving its economy towards less polluting industries and therefore had to close down some of the industries. It is also to a certain extent with respect to how the global, especially in terms of the shale gas capital investments, that had paused, and some of the shale gas units had to be closed down because oil prices had crashed at that point in time. So it's a combination of not only the war, but a significant build-up of supply constraints over the years. It's very difficult to understand how this inflation channel will end. In my opinion, possibly at certain point in time, there will be a crack in terms of the demand. The high inflation obviously is unlikely to support private consumption expenditure for long. Today it is getting supported because COVID had provided this opportunity of additional and excess savings being held by the population as they were sitting indoors. Now, when that exhausts itself out, and when central banks also raise interest rates maybe to unsustainable levels, that is the point in time I think you can get some hope in terms of inflation coming down. But as I think most of your panelists did point out, they will probably be remaining higher than what you had experienced in the global scenario, even post the global financial crisis, when central banks had pumped in so much of liquidity and driven rates down to even sub-zero levels in certain conditions.